This is the American Hard Assets Market Minute. I'm Ryan Kazimierski, your editor of American Hard Assets, and today we're joined by Mark O'Byrne of Goldcore. Mark, it's August 30th, the last trading day in August. Where are we headed in the statistically important month of September and beyond?
Yeah, well, we've had two consecutive higher closes in both July and in August, and we're 5% higher in dollar terms in August now. So it's been quite a strong month, and that's impressive given the fact that we've seen quite material weakness come into the equity markets. And that, I suppose that is bullish both from a technical perspective. It's also bullish from a momentum perspective. I suppose we're coming into the seasonal sweet spot. September is one of the strongest months for gold, along with November. They're two of the strongest months from a seasonal perspective. We actually put out research today looking at that, and the data is fascinating, both over the last 10 years. And also, if you go back as far as 1975, it shows on average that you get a return of roughly 2.6 to 2.7% in September. And then November is also a very, very strong month with very, very strong gains. So we think that aligned with the fact that we see very strong fundamentals, extremely strong physical demand, a lot of tightness in the physical marketplace. We have gold and backwardation, and there are issues in the physical marketplace in securing the larger bars. So I think these facts suggest that we are going to go higher in the coming months.
A lot of people want to talk about the U.S. Fed tapering and China and their demand. What has, in the next couple of months, what can have the most effect on the price? Is it tapering? Is it China? Is it Syria?
Well, I wish I had a crystal ball. It could be any one of these factors or a combination of the three of them. I mean, that they are some of the primary factors. The Syria thing is the latest thing. But the Fed, whether Fed tapers or not, our belief is you have to watch what central banks do rather than what they say. The Fed has been talking about tapering, talking about going back to more conventional monetary policies, moving away from the ultra loose monetary policies of recent years. And they've been talking about that for years, but they've never done it. And I think that, all that is just talk is cheap. So we believe it's only when interest rates start to rise and we see a series of interest rate increases and we see interest rates above the rate of inflation again, that the gold bull market will be vulnerable. But we think that is a long way off.
All right, Mark. Well, I appreciate your time, and I look forward to talking to you soon.
Pleasure, Ryan. Good talking to you.
Today's Market Minute from American Hard Assets.